Hi, I'm Joseph Gillette, and we're going to do a very important lesson on due diligence. Why is due diligence important? And let's first back up and explain what is due diligence. So if you go into the store and you want to buy a product, you're pretty familiar with things like groceries or basketballs. But what about private investments? If you purchase a product, do you not want to know what it is? I can create an investment that could be almost anything you can imagine. I can create any documents I want. The human mind is very creative. There's no standards, but there are regulations, and that's why due diligence is important. Why do broker-dealers require issuers ask for a use of proceeds? The use of proceeds is what you're going to do with the money. So you're going to invest $1 million with me, and I'm going to go build a widget factory, and I'm going to sell widgets, and then you're going to have a return on your money. Anytime you give your money to someone else and you expect to get money back, like it's an investment, and you're not hiring them to cut your grass, that's a security. Any kind of passive income is security, a security. The only exception is if you're investing in a fund, but the due diligence rule would apply to a fund as well. So for example, if you're investing in a trading fund, don't you want to see their track record? Of course. You want to know how well they did last year and the year before that and the year before that. You want to find out everything you can about them because you worked hard for your money, supposedly, and now you're going to give them money. So you want to know everything you can about that. That's why due diligence is important. So let's take a look at a couple examples of some due diligence. So we have pulled up here on the screen issuer and management checklist. So if let's say that you were an issuer is someone who is issuing securities. If you were getting money from investors and you wanted the broker-dealer to identify investors for you, and you came to Mr. Broker-Dealer and you said, I would like to raise $1 million from XYZ accredited investors, will you help me? The broker-dealer will say, sure, of course, that's what I do. And he's going to ask you for a set of documents in this checklist. So for example, entity documents, incorporation documents, your charter, bylaws, partnership agreement, how much authorized stock is there, your financials, bank account statements, tax returns, audited financials, if available, your business plan, your business strategy. How do you plan to achieve your goals? Related offerings. Has the same issuer offered something in the past, or are they offering more than one thing? Background check. Are there legal issues? Are there lawsuits outstanding against the issuer or its principals? The principals are the main people or the owners. It could be both. So a principal is usually an owner, but not necessarily. You could have a principal who's like the CEO and a principal who's the owner. But basically the main principals, you would do the background check on them. Do they have any lawsuits against them? Did they file bankruptcy? Were they arrested? Did they just everything? You want to find out everything because all these things are going to paint a picture of who they are. Are there conflicts of interest? Now, what is a conflict of interest? So let's say that the entire business is predicated on the issuer doing business with the brother of the issuer. That would be a conflict of interest. Are there intellectual property situations? Is any of this business patented or trademarked by another business that may sue the issuer, or other intellectual property issues? Meeting in person, press the flesh. That's important too. Is the issuer being honest? If you walk into their office and it's very poorly organized and there's a big mess and they don't have anything kind of in order, that's another data point. So here's just a couple things that we should look for. What is the history of the issuer? Do you have key man insurance? What happens if the issuer and or its principals get hit by a bus? You have insurance for that. Are they clean on the opaque? Get their photo ID, passport, social security number. Run it through the opaque. Are they on any kind of watch list? What are their historical financials? What are the trends in their financial statements? Are there any other cash needs? Are there any audit conflicts? Is there any internal controls? What are their internal controls? What are their contracts? Do they have mortgages? Do they have loans? What are the size of their loans? What is the interest rate of their loans? Here are some other things. How much money have they raised from other investors? And how much stock did they give away for that money? Do they have any significant business contracts? Any customers? Have they defaulted on any previous obligations? Do they have any regulatory issues, litigations, arbitrations, liens, judgments, management changes, angry ex-business partners? How long have they been in operation? Are they willing to share information with you? Do they have staffing issues? For example, do they have angry ex-employees? Some issues with HR. Here's an example of an issuer who did everything right. And this was for crowdfunding, so the bar is a little higher than for a Reg D offering. But this is what an issuer should do. An issuer should create an offering memorandum, and that can be prepared only by an attorney, specifically a securities attorney. And in that offering memorandum, it's going to explain all these things which we just asked in the previous document. Where is the issuer located? It says right here, 700 North State Street, Clark Summit, Pennsylvania. This is their website. This is the date. Here's the executive summary. Gab is a free speech software company. We generated $5 million in revenue in 2021. Our business is cash flow positive as well as debt free. Who we are. Now we're going to scroll through this. We're not going to read the whole thing to you. This is going to be available in the links at the end. It's not about going over the entire offering memorandum. These are all going to look different. The point is, this is very detailed. It shows what they do. Here's a photo of the Gab Marketplace. These are the products we sell. This is the service we provide. Gab TV, Gab Voice. This is our business model. This is how we generate money. Gab Pro, we sell subscriptions. We sell hats, etc., etc. Here are our user growth charts. Here's an industry overview. All this information. It's very detailed, very well done. Congratulations, Andrew. This is one of the best offering memorandums ever created. And that should serve as a model to us, because every issuer should have this kind of attention to detail. Because here's the thing about investment markets. And if you're a registered representative, they beat you over the head with this. You can do whatever you want in markets. Markets are regulated but not controlled. But the most important thing about any investment offering or a fund offering or any kind of securities is disclosure. Disclose, disclose, disclose. As long as you disclose what you're doing, you can sell anything. And that's what Gab is doing here. Gab is saying, these are our financials. This is the period ended in this date. This is our other financial data. These are our executives. And so on and so forth. And it's certified. And this gets filed with the SEC for a crowdfund offering. And you can find it online. It's public. It's a public document. So this is a very positive example of what an issuer should have. Now, of course, most issuers don't. But if you're opening a trading account, for example, you'll want to see that the manager has a license. You're going to want to see that he's a good manager. I mean, you don't want to invest your money and have it evaporate, right? You want to see physical evidence, not stories. Or, my friend told me that this is good. That's meaningless. All that matters is the documentation. And that's why due diligence is important, because you don't know if you're investing in a black hole. There's a lot of scammers out there, and they make a very good living by unsuspecting people who don't understand the process of due diligence. There's a few red flags to look at, which we should probably get into in another video because we can do hours and hours on red flags. But for example, an issuer should have a securities lawyer. An issuer typically will work with a broker-dealer who's registered with FINRA, but not necessarily. So by not using a broker-dealer, that's not a red flag. If they don't have a lawyer, that's a huge red flag, because there's only two types of people who organize the whole financial business of private investment markets. That's lawyers and registered reps of broker-dealers and investment bankers. Licensed people who work with institutions and lawyers and trust managers. There's some other types of fiduciaries, but lawyers create these documents. So if an issuer creates his own document, that's, well, it's not necessarily a red flag. If he's a 20-year-old kid and he doesn't know anything, that's just an idea on a napkin, we call it. There's nothing wrong with that. But the advice to a guy like that is get a lawyer. 99.9% of all investment offerings are written by lawyers. Issuers themselves, meaning the principals, the entrepreneurs who start a business, are not capable of writing legal contracts. And there are thousands of law firms in the United States and in the world, in Germany and in France, wherever, who will do this for you for a reasonable fee, and they specialize in writing contracts such as offering memorandums for small businesses who want to raise money. They will advise you on how to do it. They will file your forms. So in the case of Gab, they had to file a Form C for the crowdfunding. If you were doing a Reg D offering, you'd have to file Form D. It's more of a survey poll. You can't be declined. The SEC doesn't look at the quality of your offering. They just look that you ticked all the right boxes. But it has to be public in the case of Form C. In the case of Form D, maybe some issuers don't do it, but they're all required to, so they should do it. And by the way, that's the one thing that the broker-dealer cannot do for you, is file your Form D and create your offering memorandum. That has to be done by a securities attorney. So going back to the issuer management checklist, why does the broker-dealer ask all these questions? Because the broker-dealer is doing the heavy lifting for the investor. So when a broker-dealer gets all this information, they review it, and most of the times they approve the offering. I mean, why wouldn't you? Only if something was a complete fraud would something be declined. So most of the time, compliance reviews and approves the issuers before they're signed up with a placement agreement. And then this information is not shared with investors, but the broker-dealer can tick a box, and that box is, we can make a representation to our investors that, yes, this is a solid offering. We've looked under the hood. We've went to the guy's house. We've checked this guy's background. He's the real deal. And that's not a guarantee that things will work, obviously. But the broker-dealer is at least saying that the issuer is saying true facts, meaning they're issuing securities in an offering that's bona fide and legitimate. The broker-dealer is not saying that this is a good investment. That's not the case at all. Broker-dealer is not saying that this will have a certain rate of return. It's impossible to know how startups will do. Most startups fail. But the good news is your total risk in investing in a startup is 100% of your investment. You can't lose more than you invest. So you should just simply add a little bit of startups to any portfolio and only invest a little bit of your portfolio. So you're taking risks that you can afford to handle. If it doesn't go well, you lose 100% of your investment, and that's it. So going back to the point of this, the most important thing for any investor or broker-dealer is doing extensive due diligence. I bet you that there are people who passed on FTX and WeWork that did their due diligence and didn't like what they see. Just because Sequoia invests in something, that doesn't mean it's good. Just because Bono invests in something, that doesn't mean that it's good. And by the way, the worst investor of all time is Bono. But that's mostly because of charities and he's trying to make an impact. But you always want to check under the hood if you're giving someone money. And in most cases, someone has already done all that work and they have a data room and you just have to click a button, access the data room, sign an NCNDA, and see all these documents. So all of these things should be in one place. And that reminds me of one last thing before we end this. We should look at an example of what a data room looks like. This is what a data room should look like. And these are just templates, so these folders are empty. What are the risk factors? Business and operations, company information, principals and employees, resumes, CVs, photo IDs, financials, bank statements, patents, market research, cap table, who are the owners, past offerings, what are the offerings, compliance, do they need licenses, are they following all the rules? This is just the tip of the iceberg. You want to just find out everything you possibly can, because if you don't, it's your money at stake. I mean, do you want to just risk like as if you're going to the casino? I mean, what differentiates investment markets from gambling is research and due diligence. So if you don't do due diligence, if you don't collect all these documents when you're making an investment, you probably have better odds at the casino because you're just basically throwing money away. Because when you give money to someone else, they have shareholder liability. They're liable to you. But there's a lot of bad actors in the world. And maybe they just want to keep your money and go on vacation or buy a boat or pay other investors back so it looks like that they have a real investment. So you want to be really careful, especially with new issuers who don't have a well-known name. So the reason I so much like secondaries is the companies that we typically transact in have a very strong reputation. Of course, there's risk. They're private companies, but like Databricks, SpaceX, companies like this, we feel like there's a certain credibility because of their track record. You know, SpaceX is almost a monopoly on space, you could say. I mean, there's very little risk that SpaceX is going to go out of business, for example, or become a fraud. I mean, they launch just tons of rockets. They have thousands of employees. It's just a wildly successful business. So if I was an investor, I would want to invest in things which have a very good risk-return profile. If you don't do your due diligence, the risk is unlimited. There's unlimited risk because you don't know. It's a black hole. It's just literally like going down the street and throwing your money at strangers. But even in that case, you'd probably have a better benefit because you'd be maybe helping some poor people who don't have food to eat. In this case, you're just giving it to someone, and there's no expectation that you will ever get anything back if you don't do your due diligence. That's the point of doing your due diligence. It's the most important thing in private markets investments.